Hi friends, in this episode we will see about the trend of the stocks. The trend of the stocks is uptrend or downtrend. So you need to know the trend of the stocks if you are investing for a short term or long term trend actually. Suppose you want to be a long term investor, so how is the trend of the stocks for the long term? Suppose you investing for the short term, how is the trend of the stocks? So while we entering the stocks, you need to know the trends of the stock actually before making the trade. So here I have used a Zerodha portal. So you can choose this candle type as a candle type, chart type, then the day, each bar represents each days. Then you can select studies. You can, for the trends, you can use moving averages. So I have taken a moving average of 20 days, moving average of 50 days, moving average of 200 days. So if you are long-term investors, you want to hold the stock for a long term, you can keep a 200 moving average. Suppose we are very short-term trader or something, you can use for 20 day. Then medium-term investors can use it for 50-day moving averages. So I will show all these examples where you can, if you maintain the trend of the stocks, you can make a good gain also. So here I have taken an example of Indian hotels. So this red line indicates this 200 moving averages. This is a 20-day moving average. Then the green color represents the 50-day moving averages. Suppose you want to know the trend of the stocks, you can see it here. It's now coming in the downtrend. So stock is coming the downtrend. So if you see the short-term moving averages, 20 and 50 moving averages, it's pointing downwards actually. But the long-term trend of the stock is up actually. So it's meeting the near-term long-term trend of the stocks actually. Long-term trend is a 200 moving averages. See, most of the stocks will take a support at the 200 moving averages. So see, you see here Indian hotels, it take a support at near the 200 moving average. Then here it has taken the 200 moving averages. We will see a couple of examples to show that also. Suppose a guy has entered the stocks here actually, this range actually, so 100 thing. He is kept on holding the stocks for a longer term horizon. So it will have an intermediate fluctuation. So you can keep a stop loss. Okay, this is the stop loss. This is the stop loss like that. You can keep on moving the stop loss, and unless it comes down, break the 200 moving average. The 200 breaking the 200 moving average will show us a bearish actually. Bearish means it will come down. Chances of coming down is more actually. So in that trending stocks. So I will show you a couple of examples. So this is Raj Ratan tire wire making company. So this stock has become a multi-baggers in a last years actually, couple of years. So if you see here, if you are invested here, then the stocks maintains this uptrend. Now only it has broken the recent downtrend. It has broken the 200 moving average. So if you are a long-term investor, you identified small companies, companies, then you want to have a long-term horizon, then you can maintain this same stop loss. As long as it goes up, you can increase your stop loss and maintain these targets also. So here it will take support at the 50-day moving average. This is a 20 days. This is a 50-day moving average. It will usually take a supports actually. So 20-day, you can keep on watching the trends of the stocks actually. Suppose in this uptrend, if you see here, it's continuously going up actually, but it's taking the support at the 20-day moving average here. 1, 2, 3, 4, 5, 6 like that. Then it's the trends got violated actually. So you can keep the trend actually. We can watch the trend of the stocks. So you can use it along with the support and resistance which I have shown in the previous videos. So if you can take any digs on technologies. So this stock is in good uptrend actually from the 2022 here actually, unless now it has broken. Now it recently also broken it, and previously also it broken that. So if you keep this the long-term trend of the stocks, if you watch it 20-day moving average, 50-day moving, see it taken support, couple of support at the 50-day moving averages here. So it's got broken, but you can keep a stop loss at 200 EM moving averages also, moving averages. So this way you can maintain these trends of the stock. So this is a long-term trend of the stock. This is a short-term trend. So now it's pointing out the downtrend actually. So the 20-day, 50-day moving averages, it's pointing out. Then the long-term trend also is a little bit bearish actually. So the stock is clearly coming down after hitting this resistance. Then see here, this resistance last thing 1 2 3 4 times it touched this resistance actually. So then it started coming down. So now it's in severe downtrend, this stock. So you can easily identify this downtrend. When you are entering the stocks at the downtrend, you should wait for this to the stocks to settle. We never know which place the stocks will settle actually. So we will be keep on watching the stocks unless it gets support and settle sometime there. Then only we need to enter. But the downtrend entering is you should not do it actually. If you're unless the valuation becomes attractive, you should not enter the stocks actually. So next we will see about the good trending stocks also. This is Varun Beverages. This is a consistent compounder for long term actually. So this stocks is maintained the uptrend here. So it takes multiple supports at the 50-day moving average and keep on the trend is going up. Now the trend is short term, it's very short term, its trend is down, but 50-day moving is little pointing out. Then the long term trend of the stock also up actually. So we can keep on moving the stop loss. If you are a long term investor, you entered the good business also, you can keep on holding it. Similarly for Astral also, so you have entered the stocks, then it gives multiple support at the 50-day moving average, then you increase the stop loss, then once it broken you can exit the stocks also. If you are okay, so this it will enter the bearish, then you made a good profit also, you can have one of the technical analysis. This is one of the parameter to exit. If you are a long-term investor, you made a huge gain also, but you want to exit the stocks, you can exit. It's one of the parameter rather than regretting it. So I will show about some of the very bearish stocks actually in this long term also. So these stocks, this is Lupin, so it's pharma company. So it has taken the support at the 200 DMA moving average. Here also it took the support. Here also it took the support. Here the stock is now clearly in long term downtrend. This also short term, it's moving a downtrend actually. So it will see here, the stocks when it goes the downtrend actually, these moving averages will act as a resistance also. So it will come here to a 50-day moving average, then it hits the resistance, then it's coming down, then it's moving up. So it should broke that this DMAs to move up actually. So it's in the stock and it's a downtrend. So if you're a long-term investor, you entered the stocks and you have exited, means you must have saved a couple of monies also, exiting at the right time rather than regretting it. This Metropolis also, it's a dynastic company. So it has a good trend, uptrend actually. So it maintained this good uptrend. So the earnings didn't come for the stocks actually. So it started crashing it. So if you're a long-term investor, you kept it this stop loss, then you exited the 2,856. Now the stock price is 1,300. You almost saved 50% of your loss actually. So you should know this trend of the stocks, and exiting also better actually, but you should be keep on watching the earnings of the company and the valuation also. Apart from this technical analysis, you should keep on watching it. So this gives an example. So you, rather than regretting it, okay, so you made a good gain and exited the stock. Couple of stocks in these uptrends. So I'll show, this is one of the multi-bagger stocks actually. The earnings didn't come, it's a range bound stocks actually. It didn't move for a lot of years actually. This 1.5 years like that. Then the earnings came up actually. Then it starts moving uptrend actually. So now recently it has broken the 200 moving averages. So here the long-term trend of the stock is up actually. So we can keep a stop loss. It's an uptrend. It's moving a 20-day moving, and it taken the support, multiple support, 50-day moving, and it's taken multiple support. Then you must have short-term trader. You want to exit, means you must have exited here actually in the 50-day moving average. The uptrend is kept on going actually. We will see about the steel stocks. The cyclical stocks, when the steel price are cyclical and consistently going up, you make a lot of gains. This is Godavari Power company actually. This is making steel and pellets. So this is at 200-day moving average here, then the 50-day and 20-day. So here it's the steel cycle has entered a good uptrend actually. The steel prices are rising, the Chinese economy is booming. So that time, if you see here, that 50-day moving average it taken multiple support, the trend is keep on going up actually. Then that 20-day moving average also. So if you are long-term investor, you entered these stocks, you must have exited at this price actually. Or if you made a good gain, you can make an exit at the right price actually. Once it crosses the 50-day moving average also, you can make an exit call. So it maintained this long-term uptrend. You will see in the Titan also. So Titan, this is a good uptrend for the stocks, and it maintained this uptrend actually. So then once uptrend broken, it came down. Then it's now in the downtrend actually. It has broken the 200-day moving. So this couple of stocks I have shown the examples. This way you can use that moving averages to know the trend of the stocks. And if you are doing it for the short term investment period or long term also, you can keep on increasing the stop loss also if you are long term investor, unless it didn't broke the 200-day moving averages. You can keep on increase the stop loss as long as the stocks keep on moving upwards actually. But you need to keep a watch on the fundamentals of the stocks also, and trend of these market also, Nifty also. Thanks for watching.